Hi everyone, I hope you're all doing wonderful today. I'm the Portfolio Panda. Suspiciously close to the framework of a Ponzi scheme today, I'm going to have a look at how banks work and make money. Today, I'll provide detailed overview, including the different types of banks and how to choose between a bank and a credit union. Let's get started. What is a bank? Let's begin by understanding what a bank is. A bank is a financial institution that provides a range of services to individuals, businesses, and governments. Banks act as intermediaries, accepting deposits from customers and using those funds to offer loans, mortgages, and other financial products. When you deposit money into a bank account, the bank can use that money to provide loans to someone buying a house or a business seeking funding for expansion. By taking your money, they can pay out other investors. Now, where have I heard that before? Types of banks. Now, let's explore the different types of banks. Central banks, such as the Federal Reserve in the United States or the European Central Bank, are responsible for regulating and controlling the country's monetary policy. They manage interest rates, control inflation, and oversee the stability of the financial system. Retail banks, also known as commercial banks or consumer banks, are the banks most people are familiar with. They offer a wide range of services to individuals and small businesses, including savings and checking accounts, loans, mortgages, and credit cards. When you open a savings account at a retail bank, you earn interest on your balance. The bank can then use your deposits to provide loans to other customers. Commercial banks focus on providing services to businesses, such as business loans, lines of credit, cash management solutions, and trade financing. A commercial bank may offer a line of credit to a small business, allowing them to borrow funds to purchase inventory or manage cash flow. Investment banks primarily deal with large-scale financial transactions, such as underwriting securities, facilitating mergers and acquisitions, and providing advisory services to corporations and institutional clients. An investment bank may assist a company in issuing stocks or bonds to raise capital for expansion. Shadow banks are non-bank financial institutions that perform similar functions to traditional banks but are not subject to the same regulatory requirements. They provide services like lending, securitization, and structured finance. Peer-to-peer lending platforms, where individuals can lend money to borrowers without going through a traditional bank, are considered shadow banking. Savings and loan associations, also known as thrift institutions, specialize in accepting deposits and providing mortgages and other loans to consumers. A savings and loan association may offer a competitive mortgage rate to help individuals purchase a home. Credit unions are member-owned financial cooperatives that provide services similar to banks. They are not-for-profit organizations that prioritize serving their members' financial needs. Credit unions often offer lower loan rates and higher interest on savings accounts compared to traditional banks, as they prioritize their members' interests over profits. Credit union versus bank and how to choose a bank. Now, let's compare credit unions and banks and discuss how to choose a bank. Credit unions and banks both provide financial services, but there are some differences to consider. Ownership. Credit unions are member-owned, while banks are typically owned by shareholders seeking profits. Access and services. Banks generally have a wider network of branches and ATMs, while credit unions may have more limited access. However, credit unions often offer personalized customer service and competitive rates. Eligibility. Banks are open to anyone, whereas credit unions have membership requirements, such as belonging to a specific organization or community. When choosing a bank, consider the following factors. Services offered. Look for a bank that provides the services you need, such as checking and savings accounts, loans, or investment options. Fees and charges. Compare the fees associated with different banks, including account maintenance fees, ATM fees, and transaction charges. Interest rates. Check the interest rates offered on savings accounts, loans, and credit cards to ensure they align with your financial goals. Convenience. Consider the bank's branch and ATM locations, online banking capabilities, and customer support options. Remember, choosing the right bank or credit union can have a significant impact on your financial well-being. Take the time to research and compare your options based on your needs and preferences. Thank you for watching, and be sure to subscribe to our channel for more informative content. As usual, let me know any questions in the comments below, and make sure to share this with your least financially savvy friend, then tell me if I did okay in explaining the topic. Your most valuable asset is your time. Thank you for sharing yours with me. Until next time.